Morning, everyone, and welcome to our webinar on understanding pass-through costs of electricity. My name is Fiona Okadi, and I am delighted to have you join us here today. So this event is hosted by the Institute of Economic Affairs, which is a public policy think tank in Kenya, and we're dedicated to fostering informed discussions that shape public policy in our country. So the program that is hosting this event today is Economic Competition and Regulation Program, but we have several programs. One is a public finance management team. Then we have the Popular Economics Program, the Constitution Law and Economy Program, and then there's a lot of economics there, and also the Trade Development Program and the Futures and Foresight Program. So all of us have different missions and mandates. And so today's webinar is an essential part of our commitment to public education. And we aim to shed light on this complex topic of electricity pricing, specifically just focusing on the pass-through costs. So because we know this are usually a significant component of our electricity bills, yet you have sometimes consumers and even some industry stakeholders which find them a bit challenging to understand how it works. So the agenda for at least the next perhaps 1.5 hours is to break down these pass-through costs, what they are, and the various components that actually comprise them. Then we'll be taken through the calculation methodology, probably some of the influencing factors, and then the implications. I'm honored to have Mr. Newton Munyolo from EPRA, so that's the Energy, Petroleum and Regulatory Authority. So without further ado, I would like to welcome Mr. Newton to go ahead with the presentation. Thank you so much.
Thank you very much, Fiona. Good morning. I think my name is Newton. I'm Manager of Pricing and Competition at Authority, Energy and Petroleum Regulatory Authority. It will be my privilege to take you through this small presentation on specifically on issues of pass-throughs in electricity bills. Yeah, so I'll let Fiona control the presentation as I take you through the rest of the presentation. So thank you. I think that is the outline of the presentation. I think I'll just jump up most of the introductory slides, and then I take you to the main slides. So the first part is on the mandate of the authority. I think I'll leave that one. We have the issues of the sector statistics, the key statistics, and then you have the electricity pricing, and then some presentation on some regulations. I think that's an overview of the current situation in the country. We have almost 3,236 megawatts of installed capacity, with a peak demand of 22,170 megawatts. I think that was early February. And then you have a small, that is the outline of the various composition of that installed capacity, from thermal, from solar, from biomass, hydro, geothermal. So I leave that kind of statistics because I think that is available in other documents. So you can go to the next slide, please. And then you have the trend of the energy mix. You can see how it has been evolving. I think from May 2023 to April 2024. So it's almost like 13 months. You can see the peakedness of time was around 7 p.m. I think that's between 6 p.m. and 10 p.m. every day. You can see we use a lot of thermal generation. I think because of the issues of peak demand. So I'll leave that one also. You can go to the next slide. I think that is just now the energy mix as of April 2024. I think you can see that's just last month. The generation that we got from the grid as of April 2024. Hydro was around 2.16%. Geothermal was at 7.45%, and then wind was 7.36%. So you can see there's a small difference between the proportion of the energy of the various technologies in the energy mix and the installed capacity. So as you can see, while thermal they have a high installed capacity, you can see the utilization is less than 10%, is around 8.3%. So it just tells you about the policy of dispatching more renewable as opposed to thermal generation. That's another slide that just talks about the trend of peak demand versus the power generated. I think I'll leave that one as well. You can go to the next. So I think that's now the major, probably the main part of this presentation is on the issue of electricity pricing, and I think the mandate of the authority as far as pricing of energy in the country is given from the Energy Act 2019. There are various sections here that deal with the issues of pricing: Section 10, Section 11C, and Section 165, then Section 163. So it provides for setting and reviewing of retail tariffs, generation tariffs, and even service contracts like piece of network contracts. So that's part of the mandate of the authority. And then when the authority makes those kind of decisions, they have various bases they consider. For example, to attract to promote financial integrity of the utilities, attract capital, operate grid efficiently, and then compensate investors for the risk assumed. So those are the kind of consideration that the authority looks at whenever it's making consideration for making tariffs both at generation or retail. So we also review, the authority also reviews and approves generation tariffs, what you're calling the bulk tariffs between licensees. So you can see they submit what you call a power purchase agreement, and then the authority reviews the same and then provides the approval. So generally that's between, for example, a generator and a utility, but you can also have between a generator and a customer directly. We are seeing most commercial industrial customers are asking for all new power, so they go get a guy who can do for them a solar power plant or a small wind power plant, and then now they have their own kind of a small power purchase agreement. We submit that to the authority for approval, and then we make a consideration of the same. So I'll not talk too much about that. And then I think that we can start from here, just the steps that we normally take when you're doing now the setting up the retail tariff. Because you set out the retail tariff, and then you have now the monthly pass-through. Okay. So this is just the process for setting up the retail tariff. We start with the issues of demand forecasting, both for the peak demand and also the energy. Because now you have to do both forecasting. You have to focus for the peak demand, meaning how much megawatt of farm capacity that you need at any given day to meet the demand. And then you also need to do the demand forecasting for the energy now, the kilowatt hours. Because those are different. You can have enough kilowatt hours from renewables like solar, wind, but you don't have enough power at the peak time. So you have to do those kind of demand forecasting. So it's now the next one is generation planning to meet the forecasted demand. Now you need to now schedule now outages of the plants. How would the plants be scheduled in terms of outages? Because you don't want to have all your key plants out and doing them under maintenance at the same time. So you have to do that kind of what you're calling generation planning. And then you look at now the third proportion is now looking at now the revenue requirements that you need to run for the entire sector. Because now Kenya Power submits a tariff application, but that tariff application is not only for Kenya Power. It is a revenue requirement for the sector, meaning it has a revenues for Kenya Power O&M costs. It has revenues for REREC, Ketraco. It has revenues for KenGen generation costs. It has revenues for independent power producers. It has even revenues for government taxes. So there's a lot of components. So the customers only see Kenya Power making application, but it's actually, we call it a sector revenue requirement. So you have to do that kind of revenue requirements. And you have to look at the existing contracts. For example, what are the existing contracts between Kenya Power and KenGen, Kenya Power and IPPs, Kenya Power and REREC, Kenya Power and Ketraco. And then you also look at now what are the incoming contracts that you need to consider, because all of those things have to be priced and put into consideration. Then you look, I think the other issue is I think that one I'll leave it. We're looking at the issue of marginal cost of generation. I think that's one I've already talked about it. And then now Kenya Power will submit now that kind of validated tariff application to the authority for review and approval. And then the authority will look at its own, do its own due diligence about some of the costs that have included in the tariff, and they take a stakeholder engagement, educate the customers and the public about the application. And then now, at its own discretion, the authority will make a determination of the final tariff, and then it will publish the tariff for implementation. So that's just the retail tariff review and approval process. So you can move the next slide, please. As I said, those are the objectives for in setting up tariff. I think the first one is the economic policy to ensure efficiency in allocation of resources. And then the financial policy is to ensure short-term and long-term financial viability of the sector utilities. Because now you also need to make sure that the utilities, they have enough revenue to operate, otherwise they collapse. So if you also need to take it into their consideration. And then you have the social policy. Social policy is about now providing this basic service or good, that is electricity, to even those customers who would not be able to afford them in a competitive market operation. So you have to look at the social consideration. That's why you have introduces issues like lifeline tariff for the low-earning customers. So I think we can go to the next presentation. Well, I think I've already talked about this one. This is just a slide that shows what is included in the revenue requirement model. And then you said it's issues to do with power purchase costs. We have the issues to do with O&M costs for both the utilities, and then the issues to do with depreciation, taxes. And then you also have a return on the that we give to the authority, to the utilities, what you call a return on the regulated asset base. So those assets that are utilized for the purpose of providing transmission and distribution services. We have a rate of around 10.5% net of taxes that we give to the utilities. So I think we can jump to the next one. We can leave that one out. Can go to the next slide. So this is just a table that tells you the kind of tariff that we have right now. You can see what is a table that tells you from 2022-23, because the tariff the tariff was set in April 2023. So we had a tariff between for April, May, and June 2023, and then we had a tariff for 2023-24, and then we'll have another one for 24-25 and 25-26. So right now we are in 23-24. By end of June, we shall move to the second last column of 24-25 and 2025-26. So you can see the revenue requirement for the current financial year 23-24 is 184 billion Kenya shillings. And it is distributed along activities like you can see Kenya Power. The T&D cost is around 21 billion shillings. The generation cost is 117 billion. You can see the biggest component of the retail tariff is the cost of generation. It's around 117 billion. You have depreciation. You even have allocation for rural electrification schemes by REREC, and then you have KETRACO condemn cost of around 5.2. So you can see the entire revenue requirement is around 1.4 billion. So that 1.184 billion has to be divided across the demand, kilowatt hour, to get a unit cost that now will be applicable for spreading around different customer categories. So next financial year, 24-25, I think it's going to be around 186, 193. But now, you can see while the volume of the revenue requirement is increasing, as you're going to see the next slide, because of changes in demand, the actual unit cost per kilowatt hour will be coming down. So you can go to the next slide, please. And so that is now the resultant when you divide those revenue requirements into now by the units that will be demanded by what you are calling the cells. So you can see the average tariff. What is this now the most important tariff number, because it's the yield. the whole country. So you can see right now, 2023-24, the average yield is 17.10 shillings per kilowatt hour. So that is the cost before you add in issues of taxes, pass-through cost. So on average, you're paying 17.1 shillings per kilowatt hour. Next financial year is going to go to around 16.39. And then the last financial year, 25-26, is going to be 16.08. So you can see there's a downward sloping graph about when you plot the cost and the time. So it's from 17.26, 17.10, 16.39, and then it's going to end by the end of the cycle to be 16.08. So you can go to the next slide. So that tells you the kind of that slide tells you what Kenya Power submitted versus what they got. So it said the way it said the authority does its own independent review, and then now they provide now the final number. So you can see the application for 2023-24, Kenya Power asked for 18.86, and then they got 17.10. So what we do is that we look at this cost that Kenya Power, KenGen, Kechako, REREC, they have submitted for the sector. So we look at whether they are prudent costs or there are costs that can be reduced further. So we make a lot of adjustments. We change parameters like the issues of allowed system losses, the issues of sales growth rate. So we give them some targets which we expect them to meet, and then we can adjust the numbers depending on how the targets look like. So you can see that what is in blue is what their proposal was, what Kenya Power submitted for the sector, and what is in red is what they want. So now when you get that revenue requirement, then now you have to spread it around across the customer categories. You have different customers there. So you have to make consideration based on various parameters, like for example, the voltage levels. You can see across the commercial industrial customers, as your voltage increases, the cost goes down. So you also can see a guy who is connected at 220 kV as a high voltage line, you pay less than somebody who is connected at let's say 33 kV because of the issues of reduced operating and maintenance cost of high voltage lines. So there are classification according to voltage, metering arrangements, load patterns, characteristics, peak and off peak. We have a time called time of use tariffs that now that differentiates between the different times of the day, and you pay different energy charges. So I think I'll leave that one. You can go to the next slides. This is just a slide that shows now the existing energy charge rates for different customer categories. So I leave this one. This is available in the public domain. And go to the next slide. Even this one is just a continuation of the previous slide. Just tells you the actual approved energy charges per kilowatt hour for different customer categories. So you can go to the. So I think we can also talk about this slide, because now what we've been seeing is what you are calling the base tariff, because it's what is set in advance. So you set it for 3 years, the multi-year period tariff. But also you add there's something called pass-through cost. So on top of that, what I've presented, the customers also pay additional taxes and levies plus some pass-through costs. So you have a WARMA levy that currently is a levy that IPPs and KenGen, who are generating power from hydro sources of about 1 megawatt. If you have a plant that has an installed capacity of more than 1 megawatt, you pay to the Water Resource Management Authority a levy of 5 Kenya cents per kilowatt hour that you generate from that hydro source. So that cost is aggregated, and then it's spread across all the customers. So you pay per kilowatt hour of that cost for the customers. We also have a levy because the authority runs on is supported by both petroleum and energy and electricity customers. So for electricity customers right now they pay 8 cents per kilowatt hour across the entire customer categories. Then you have another levy that we call Rural Electrification Program levy. So it's a levy that supports the government initiative of extending the distribution grid to far-flung areas where we don't have commercial interests of Kenya Power extending the grid. So right now the levy is 5% of all the energy sales. So you get 5% of all the energy sales. You aggregate the number and then you spread across the customer categories. You get a number per kilowatt hour. So the customers also pay VAT. VAT they pay both on the energy charge plus the fuel cost charge, and even the issues of forex adjustment. And then lastly, so the other category is now the pass-through. The way, as you can see in that presentation, you have the base tariff, you have taxes and levies, and then you have pass-throughs. So pass-throughs, the additional costs that are prudently incurred, but because of the timing, cannot determine them in advance. So they have to be incurred before they can be expended, before they can be recovered. So for example, one of them is the fuel energy cost. Because now this depends on the utilization of the thermal power plant. So if utilization and the cost changes, you find that now even the quantum of that cost will be different. So this one is aggregated on every month, and then by the third or the fourth working day, you have a number that is sent to Kenya Power for billing. So Kenya Power collects the data, they send to the authority for verification, and then we calculate a number, and then now we calculate that number. Then you also have what you're calling foreign exchange rate fluctuation adjustment. So that is the second component of the pass-through you're calling FEDFA. So FEDFA is a pass-through that results in the differences in the exchange rates between when you are setting the base tariff and the current applicable exchange rate. Because most of these, let's say, generators, independent power producers, their contracts are in dollars, in euros. So, for example, the base tariff was set in April 2023. At that time, you have to convert this generation cost from dollars to Kenya shillings. So it is a number that you use. But now, with time, let's say now in this month of May, because of the differences in exchange rates, the actual amount of Kenya shillings that Kenya Power will be paying per unit generated from those IPPs will be different because of that exchange rate differences. So now that difference is what constitutes now, is what is aggregated per currency, mostly is Kenya shillings, mostly is USD, euros, and yen. Also, that is where most of the exposure in the energy sector is. So it's aggregated, and then each month, and then it's spread across all the units that will be sold. There's a formula for doing that. I think you're going to see it. And then lastly, you have what you're calling inflation adjustment. So it's just a parameter that recovers the changes in the cost of living. The general, because now it is related to the issue of operating and maintenance costs. Because up under most of the operating and maintenance costs, we have recurrent costs that are indexed to inflation. So when they change, inflation changes, you find even that one changes. So we have those three parameters we call pass-through costs. One is fuel, energy cost, you have forex adjustment, then you have inflation. So you're just going to go to the formula for how each of those parameters is calculated. You can go to the next slide, please. I think this just now the same way of what I've said. The most important point there is that these costs are considered to be prudent and incurred costs. So they are not additional costs, they are just part of the generation cost. Because you cannot have, people normally think that it's not part of generation cost, but it's part of the generation cost. It's part of the cost of generating, transmitting, and distributing power to the country. So as I said, they are uncontrollable at the onset of setting the time, so they have to be factored in to the cost on monthly basis. So I think we can go to the next presentation. Yes. So that is the formula for the various pass-throughs. I'll talk about the first one, fuel energy cost charge. So you can find the first portion is 1 over 1 minus L. So that is the efficiency factor. So L is the losses. For example, Kenya Power will buy, let's say, 100% of the units. And then now on the way, they lose 23%. So what they'll sell, the customers, is 78% of what they bought. So the losses is 23. So what that number tells you that there's a number, what you call target, system losses target that the authority says to Kenya Power. So when Kenya Power is now computing the pass-throughs, they will not submit the entire losses to the customer. If they lost 23% of the volume of the units they bought from generators, right now the only applicable allowable number that they'll include is 18%. So let's say the units they bought in a month was 1 billion. 1 billion kilowatt hours. That was what they bought from the generators. So instead of dividing all this cost by 1 billion, what that L does is that now it now multiplies that 1 billion by a portion of the allowable efficiency. So they'll do it, as I said, the allowed efficiency levels right now is 18.5. So 100 minus 18.5, you get around 81.5. So 81.5 of those of the units will be eligible for what will be called the G. So G is just what when you see that formula here is G is just the generation units. So you are just multiplying the efficiency level by the units that have been generated for the purpose of allocating across the cost. So the lower the G, the higher the cost. So if Kenya Power submitted the entire losses to the customers, G will be lower. But if they use only 18% of the allowable system losses to calculate that fuel energy cost, G will be higher. So the principle here is you don't want to subject customers to additional issues of efficiency beyond which the customer has no control. So that formula is just telling you you're adjusting the generation needs by the allowable efficiency levels. And then the numerators is just the cost. We're taking the specific fuel consumption per plant multiplied by the amount of volume of fuel that was used, and then the units that was generated from the different thermal sources. So the numerator is just the cost of fuel. Then the denominator is now the units that which you are dividing, which you are allocating this cost to it. And then you also have additional, in that formula, we have what you call the displacement, the fuel displacement cost. So we have, for example, the cost of steam. The cost of steam for some geothermal power plants, like Karia 4, Karia 1, 4 and 5, and then even Menengai is around 2 US cents. So even that cost of steam is added here because it's not included in the base tariff. And then lastly, you also add the cost of the off-grid stations. So the numerator is just about the cost of fuel for HFO. Then you add the cost of off-grid stations. They use diesel. The other plants use HFO. The off-grid stations they use diesel. And then you add the cost of steam for some geothermal power plants. And then you get now the cost which you're going to divide by G. And then you multiply by 100 to get the cents because it's normally calculated per cent. So that is the formula for doing the FEC. And it's a number that will change depending on all those parameters and how they change. And then the second pass through the forex. I think this is more it looks more complicated, but the same principles. First of all, you can see it has the efficiency issues, 1/1 minus L. So it's just to adjust the number to what is the allowable efficiency levels for the utility. And then you're looking at all the denominations. So you're taking all the payments for different currencies. If Kenya Power paid an IPP in yes, let's say euros, you take those volume of the euros, check the differences between the exchange rate of the euro when the base tariff was set, and then the amount of paying that obligation, and then you get now the volume of losses. So you aggregate all those ones for both the generation and O&M cost, and then you get a number also. And then the same is done for inflation. I think inflation now looks at only the O&M cost that Kenya Power has projected to incur. So you get a number, and then that gives you the inflation adjustment. So the difference between inflation and the other two parameters, while the other two parameters are done monthly, inflation is done after every 6 months. So you'll have a number called inflation adjustment that will be applicable for the next 6 months. While for the FEC and Forex, it will be changing every month. So that's just the difference between those three parameters. I think WARMA is a levy, but it's also a pass-through, the way I have explained it. So all those costs that Engen and IPPs are supposed to pay to the Water Resource Management Authority for the purpose of abstracting that energy from the hydros. That cost is allocated across all the units that will be sold, and then you get a Kenya shillings per kilowatt hour tariff. Yeah, so I think we can go to the next slide to see if there's additional issues on the pass-throughs. I think that's a graphical representation of the actual pass-throughs that has been happening. You can see a point to note is that between January 2022 and August 2022, I think we had a lot of static in terms of policy directions. Because I think the government of the day it said that let's park these pass-throughs at a certain number. So you can see they are fixed. Even though the actual cost that Kenya Power was incurring was higher, they were fixed in terms of a number. So you end up having almost 8 months of fixed pass-throughs. Because we have the actual and the fixed. So you can see it was static, and it was part of what the government was trying to do was a kind of a subsidy program in terms of keeping a tariff beyond at a certain levels. But I think the annual cost of doing that kind of a subsidy was around 14 billion. It was around 26 billion, but the utilities bore a combined cost of around 12 billion. And then the National Treasury said now the 14 billion they are going to support through exchequer released to Kenya Power. But I think after August, the new government came in place and they said now that kind of arrangement is not tenable. So now there was a portion of that unrecovered pass-throughs that was now added to now the actual pass-throughs starting from August. So you can see from August, there's a pickedness in terms of the actual pass-throughs that customer paid, because now they had to recover part of that cost that was not recovered and also pay the existing obligations. So you can see that chart tells you that that we had a lot of pickedness until April 2023 when we exited that program, and now from that April 2023 to the current period, we are now paying now the actual. What is incurred is what is passed to the customers. We're no longer having that kind of subsidy program by the National Treasury. We can go to the next slide, please. So that is just a evolution of now what the real cost was now. Is that what is the end user cost of electricity per different customers? You can see the evolution of different customers there. So it includes both the base tariff, the pass-throughs, and the taxes. So it is just you can see the static nature from January to August. It was kind of fixed the way I've explained. But you can see now the variability of that graph going forward, up to May 2024. So the biggest mover of that oscillation is the pass-throughs, because the base tariff is fixed. Now customers will be oscillating depending on the base tariff. So you can see that's the graph for domestic customers and small commercial customers. Next graph, please. So this is now for commercial industrial customers. I think I'll not talk too much about that. I think it's self-explanatory. Can go to the next slide. I think this is for in 2023 we introduced a new tariff called e-mobility. E-mobility is a tariff for charging stations these customers who are in e-mobility business, like Basgo, they have a special tariff that is in terms of the cost, is between the cost of commercial and domestic. So that's and even you have a new tariff for 220 kV line, 220 kV customers. So that's just a trend of their end user customer tariff. I think I just added here a slide on emerging issues in the regulations. Right now we have done what you're calling the energy market, bulk supply and open access regulations. We did public participation. I think now we've submitted to the Cabinet Secretary for gazettement. What that regulation will be entailing is that we'll be having a competitive power market. We'll also be having open access, in that you don't have to own the grid to use that grid. You can have a power plant here in Mombasa, and then your customers are in Kisumu. You only need to apply to Kenya Power for that right of use of that network, and then you will take your power to the customer. So it's bringing in competition both at generation, at retail, and even in transmission and distribution. So the customer, you also have the right to choose different retailers. You can just, if you don't like Kenya Power, you say, no, I don't like Kenya Power. There's another guy here. I tell the Kenya Power, now I'm shifting. So after 1 month, you have your new retailer, and then you can change. If the new retailer does not please you, you can send feedback to Kenya Power. So that is the latest regulation that we developed. So, and then you have another one about tariff. You have another one about regulated accounts. So those are the new regulations that right now the authority is trying to implement in terms of gazettement. There are different levels of gazettement. And then lastly, I think the last slide that I added was the issue of regional interconnection. Because right now, the way I talked about the issue of market, we have the reason why we have that kind of we said we need to have an electricity market because we're already operating in a market where we have a power pool. We have right now we are importing power from Ethiopia. We have a new arrangement with Tanzania to build their power from Ethiopia to Tanzania. So as we get interconnected, we should be able to have a market where you can utilities can sell power to regional countries using that kind of a power pool. So it's we internally, I think the market in Kenya was based on PPAs contracts. So going forward, we're going to have markets other than contracts like power purchase agreements. We're going to have under markets under spot markets, just like you have commodity trading. You can have future markets, forward market, you can have spot market. So under the regulations, those are the kind of things that we're envisaging to have in the next few years. But now the market has been constrained by contracts, and in economics, prices tend to be sticky. So now we have issues of contracts. So while the rest of the market economy has changed, because of issues of the contracts nature, you get stuck with some prices that are not market efficient. They are not the recent market prices. So when you move to issues of spot and forwards, you get to have more price discoveries. So we are going to have a composite of PPAs, spot prices, and forward kind of contracts going forward. I think That was the end of my presentation. I think it was kind of a lot of presentation, but I think you can have questions, so that you can have more personalized discussion about my presentation. So I hand back to you, Stephen Jaro, and our colleagues in studio.
Okay, thank you so much, Newton, for that presentation. So just to summarize a bit, we've been taken through some of the key statistics in the electricity sector, from generation to demand, and then we've gone through the retail tariff review and the approval process. Then we've gone through the policy objectives, which are divided into three: economic, financial, and social. And then now we've come to the main meat of the presentation, which was now looking at the entire tariff sector, from how they calculate the base retail tariff to the taxes and levies, and then the pass-through costs, which for me has been a learning point, because I used to put all the taxes and levies as part of the pass-through cost. So it's just good to know that in actual sense, there are just three, instead of initially I thought there were seven. So just going through how you calculate them, and then the different trends from 2022. And then the aspect of some of the regulations that they brought about, from the energy regulatory accounts regulations to the energy consolidated energy fund regulations. Yeah, because there were a lot of mathematics, which, yes. So I think at this point, we can go into the plenary session. So at this point, we will be able to unmute, and then anyone who either has a question can put it in the chat box, and I will read it to Mr. Munyolo, or if you'd like to ask your question by yourself, then you can be able to just raise your hand, and then I will pick you, and then you can be able to ask a question. Yeah, so the floor is now open.
So hello everyone, my name is Stephen Jairo, a colleague of Fiona. I have a question to ask Mr. Munyolo. In my view, I think the mix of power generation in the country is geared towards more of renewable. So my query is could we be seeing an aspect of the government of EPRA possibly shifting focus more so to renewable energy to avoid actually the increasing cost of electricity, and also just to take care of consumer interests? Because as well, I think in the presentation I saw a mention of the issue of social policy, as well as aspects of economic analysis, and I think aspects that should come into play when you're passing through the cost of electricity to consumers. So that's one. And then in terms of tariffs, you mentioned that it's been set for 3 years, and also noted that there's the 2 years for the contracts for power, I think it's power purchase agreements. So I don't know how those two conflate. Perhaps you not mind telling us how the two the EPRA is thinking about perhaps making the two run along together, even as we look forward to perhaps using that agreement to less at times to take care of the changes in the market as soon as they occur. Yeah, thanks.
Then maybe I can check. I got the first question, but I think the second question we need to repeat it. But on the issue of the government moving towards renewables, I think that's the explicit policy. If you look at generation from thermal sources, in the last 5 years, there was a time it was going almost 30%. Right now, it's been the issue is maintaining it below 10%. And the question is, why can't it be 0%? You have almost 400 megawatts of wind. Lake Turkana is 300, you have Kipeto 100, 400. And then you have almost 210 megawatts of solar on the grid. That capacity, it may not always be available at peak time. Because at peak time is when now the highest demand for energy is being required. Is exhibiting. So between 6 p.m., 7 p.m. and 9 p.m., you don't have solar. So even if you had 210 megawatts of cheap solar, you cannot use that kind of solar at that time. Then wind can also oscillate because even when it's raining, it depends on the wind will depend on the weather itself, just like solar depends on the sun, the radiation. Even the wind itself it depends on the weather pattern. So it can move from, and you see statistics from the National Frequency Center. It can move from like can move from 300 to 60 megawatts. If you don't have an immediate backstop technology to ramp up that kind of demand, you have a blackout. You don't have a national blackout. So that kind of the reason why you're going to see 8% permeating in the energy mix is because of those kind of issues. Then you have cost. Cost is in Mombasa is a big demand center, and you don't have generation, renewable generation sources at the cost. So you have to take power from Olkaria, the hydros to Mombasa. There's a lot of issues of voltage instability because of that kind of long distances. So you find that even those power plants at Mombasa, the likes of Rabai, they have to keep running for some hours because if you don't have that kind of support, you have a lot of peaks and downs in terms of the voltage. And then lastly, I think these are government issues that probably they are trying to address, the issue of constrained transmission network, especially from the geothermal sources in Naivasha. You find that almost the entire generation from Olkaria goes to one place in Suswa. So it's like a node. So you find most of those lines they get congested. So they have to do what you're calling venting. And you find that now they have to vent sometimes at the peak because now the transmission lines are constrained and they're not able to use that kind of evacuation. So then I think you find now they have to rely on now some of sources in Nairobi to supplement that kind of situation. So the network is constrained for right optimal. It can be made better, but in terms of where we are right now, I think with the kind of constraints, I think that mix is the most efficient outcome that you can get. But I think now I've seen the discussion about independent parties under PPP arrangements coming into now to do additional transmission lines to remove that kind of load from the truck. So I think those 3 points is why you're seeing a lot of 8%, 6% of thermal generation energy. So I think you can repeat the other question in summary. Maybe I didn't get to the second question.
Maybe I can ask another question. So initially we had EPRA publish information on pass-through costs, but now that stopped. So could you please explain to us why they no longer provide this information and what that means in terms of transparency and accountability? Because as a consumer, I used to like seeing how much of the money that I've paid is going towards this different taxes and levies, but now I can't see. It's just like a blank number, a general number.
Okay, I think each pass-through, each month, the authority gazettes it in the Kenya Gazette. That is, I think they didn't stop making the gazette. What stopped is the issue of Kenya Power providing the breakdown of that kind of end user cost. I think the reason why they gave was that it was becoming expensive for them in terms of the kind of data that you needed or the SMS requirements that you have to you have to incur in terms of now estimating that kind of a breakdown. But I think the guidance from the board, I think in April or March this year, or that I think that kind of an issue has to be reverted back. So soon you'll be seeing in your bills, especially for tokens, for prepaid customers, that kind of a breakdown in terms of what is the best energy cost, what is the pass-throughs, and what are the taxes.
Okay, thank you. Thank you for that explanation. Anyone else with a question?
Mr. Newton, perhaps as a very simple question. Of the three, there's the base tariff, taxes and levies, and the pass-through costs. What are the percentages of each?
Well, I don't know which customer category you are in. You can just do the number right now. So to do yourself, right? Because it will depend on the
Domestic consumer.
if you use over 100 units per month, you can look at the presentation. It's around 19 shillings. I think the base tariff is 19 shillings. Then you add the pass-throughs. I think last month the pass-throughs, all of them were around. If you add all of them, were around 4 or 5 shillings per kilowatt hour. Then I'll do the VAT of both the base tariff and the pass-throughs. Then you get a number. So it will depend on each customer category because different customers have different base tariff. But basically, the base tariff is the biggest component of the entire end user cost because it has a lot of the cost. But the way I said, it will depend on the different customers. It's something that you can do depending on the on each month, and depending on the amount of the parcels that have been collected.
Thanks, Mr. Newton. Any final question, comment, query? Once, going twice. Right. Thanks a lot, Mr. Newton, for shedding light on the topic of the day. Personally, I've learned a lot, and I will keep on engaging on other platforms other than this. Our YouTube page, Twitter page, as well as our Facebook page. You can reach us at IEA Kenya. So let me just take the opportunity to thank all of you for attending, for your keen listening, and hopefully you've been educated. If not, at least you've got something from this presentation and from engagement. And you are more enlightened on what happens and how your power bills come through, including the pass-through costs and the metrics that are therein in coming up with your power cost. So I still implore upon you to keep visiting our social media pages for further webinars. We have a webinar tomorrow as well from 11. Kindly do join us if you have time, and we'll be shedding light on the economics of the law in economy and privatization in Kenya. So I'd like to thank you all so much, Mr. Newton. We can't thank you enough for this. We look forward to engaging more. Thank you to my colleague Fiona for hosting this, and to the Institute of Economic Affairs, and for the APRA as well for giving us Mr. Newton to enlighten us on the subject of the day. So I'd like just to say thank you all and to wish you a lovely rest of the day. You may leave at pleasure. Thanks.